So the madness continues in the stock market and we aren't out of the woods yet. Just have a look at my trading to onto stocks and shares ISA. The current value is £106,202 and over the past 24 hours we are up by £4,125. So we are basically just £10,000 away from our all-time highs. As you can see, the main culprit once again is in the iShares Core S&P 500. Now this fund alone today is up by 3.83%, and overall since investing just about 6 to 7 weeks ago on the 24th of February, we are down by 9.26% or a loss of £10,487. Things are looking great for my trading to onto invest account today. Well, actually just compared to the last 24 hours, up by 4% or £826. And in my biggest holding here, you can see I am down by 7.81% or just now £1,682. It's honestly insane what comparison can do for you. The other day I was down about like £20,000 in just one holding, and now it's just £10,000 and it seems a whole lot better. As always, I'm using the Trading 212 app to show you guys these updates, and if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, all you have to do is to click the link in the description box down below. Alternatively, if you've already signed up in the past 10 days and haven't received a free fractional share, all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see this section, use promo code. And here you can just enter my code JUBAIR and you should receive a free fractional share. So as you can see, the S&P 500 today has taken a bit of a hike, up by about 3%. So why on earth is this all happening? And why do we see such massive dips and rises all too often in the stock market now? Well, of course, pretty much all of it has to do with the President of the United States of America, who has been making a lot of trouble for a lot of people over the past 2 to 3 months. Now, the recent uprise comes as a result of 2 main factors, I would say, in my opinion. The first was in response to, the President of the United States of America potentially firing Jerome Powell, the head of the Federal Reserve in the United States of America, because he did not want to essentially reduce interest rates too quickly. Now, the current federal funds rate is currently about 4.33%, which is actually relatively very high, and the president and most investors want a lower interest rate because in times of low interest rates, borrowing becomes a lot cheaper, and the stock market generally celebrates that as, companies will produce better profits when interest rates are lower. Everything just becomes cheaper. Now, the second piece of news is that the president of the United States of America, although he has said he will not be, stepping down in the pursuit of very high retaliatory tariffs for China, he is now hinting at de-escalation, meaning that, China may not get the incredibly high tariffs that once were negotiated. So, the whole world, or the stock market, I should say, as a result, thinks this is a good idea because if China has less tariffs to pay, essentially the whole world has a lot less costs. Now, although the president has said that there will be potentially less tariffs than, 145%. He has also said that the tariffs will not be at 0%. However, I think we are kind of used to that by now because the USA has imposed tariffs on China before. Now, if you have been paying attention to the price of gold, you can see that over the past year, it has definitely beaten out the S&P 500. There's no question about that. Now, more recently, gold is moving very quickly. We don't typically see massive rises and dips like this, but it is a massive signal that the world is reacting to all these tariffs and wants to put their money into, something they think is a better investment. And as you can see, the price of gold has completely gone up and down over the past week. Now, like I said before, I am not going to be celebrating just yet. I am still down by, combined in this portfolio, well over £10,000. And as we speak, I am again below £106,000. Now, of course, we're going to be seeing a lot of volatility and, we aren't out of the woods yet. Even if all the tariff talks are cleared up, investors' confidence in the S&P 500 has definitely diminished, and we probably will see a lot of institutional investors and retail investors actually start to diversify and put their money in across different stock markets around the world. Now, I've made a video over here which shows you how you can invest into a global fund monthly on Trading 212 if you want to check that out. Now, here's an ETF which is moving absolutely wildly even compared to the S&P 500. You can see today it is up by a massive 4.69%. Over the past month, it is still down by a absolutely gigantic 11.16%. And this fund that I had, the Nasdaq 100 £100 a day fund, is down by a massive £341. So you can see in my portfolio things aren't really going well. But you know what? I'm very happy that I did not sell out my portfolio like a lot of the comments did tell me. You know, a 4% gain in a day is absolutely amazing. And it just goes to show that if you are invested for the long term, you can benefit off these jumps. And if you're not invested into the market, you know, you can miss out on great days like this 4%. Like, where else are you going to get 4%? That's like getting a whole year's worth of cash ISA gains in just a single day. So make sure to check out some of my other videos and I'll see you in the next video.